corporations. So in this video is about financial analysis of in-house corporation. So our group have 5 members: Minh Ngọc, Tiến Đạt, Hoàng Huy, Kim Nguyên, and Thùy Trang. So let's move on to our outline. So for the outline, we have 5 parts. It's about introduction, analysis of profits, loss, and balance sheet, analysis of income statement, ratio analysis, and conclusion. So let's move on to the first part. It's about introduction of in-house corporation. So Vĩnh Hảo is one of the biggest fisher company in Vietnam and proud to be one of the first company to realize the potential of Pegasus. So established in Đồng Tháp province in 1997 and more than 20 years in business. So the subsidiary of Vĩnh Hoàng Corporations is Vĩnh Phúc Food Corporation, Octagon Holding, Vĩnh Hoàng Collagen 5, GSC, and so on. So let's move on to the next part. Is about analysis of profits, loss, and balance sheet. So we can see that as of 2019, Vĩnh Hảo current assets is at 4,611 billion, and the next year its figure will increase slightly by 120 billion, and the number has skyrocketed to approximately 20.19% to about 931 billion. So next is the non-current assets of VHC. In 2019, its value is 2 trillion. In 2020, the number has grown strongly to about 466 billion, or about 23.3%. And finally, in 2021, the value of the non-current assets of VHC has jumped significantly from 2,460 billion to 3,195 billion, or we can say that's 36.45%. So Vĩnh Hoàng overall revenue decreased by 4%, owing mostly to decline in the healthcare and Pegasus segment. So while byproduct and ad value grow, in terms of the market, the majority of the major markets fell, including the United States down 5%, Europe down 10%, and China down 9%, with only other markets increasing by 5%. This is caused as with the substantial decline in current assets. And the next is the Mekong Fish is one of the competitors of VHC. So it's prominent unit of firm in Vietnam that specialize in aquaculture processing and exporting seafood. In 1991, beginning with the products, the firm opted to invest in increasing frozen octopus, stingrays, shark goods after seeing the expansion potential of the seafood processing and exporting sectors. So this is seen as a watershed moment in long-term evaluation of Mekong Fish, September 24, 2009. So AAM is the list and trade on the Ho Chi Minh Stock Exchange, which stand for HOSE. So on the other hand, VHC competitors is AAM, which is the Mekong Fisher Joint Stock Company. In 2019, AAM current assets value reached 185,708 billion. So this value dropped slightly by 7.79% in the following year. So the number continued plummet to only 100 after 33,042 billion. So the next values we consider is non-current assets. So this value of AAM tended to decrease when between 2019 and 2020. So this value has decreased by more than 2 trillion and continues to decrease in the next years. Was one of the 1,400 billion. So that is the end of my part. So we move on to the next part, which belongs to debt. Thank you for listening.
So thanks Ngọc for introducing me. So now we continue to analyze the value in the balance sheet. So first about the non-current liabilities of the SC, it raised significantly each year from 19.4 billion in 2019 to 85.1 billion in 2020. And also it raised into 173.6 billion in 2021, which increased 373% and 791% compared to 2019. This value is one of the special things about VHC in these 3 years because it's skyrocketed and so much more difference each year compared to the other value in the balance sheet. Of course, the rise of non-current liabilities was not something abnormal, was not something special for companies considering the impact of the COVID-19. However, in the case of Vĩnh Hoàng Corporation, it's completely different and it's come from their asset, as Ngọc had explained before. Their current and non-current assets rise each year. It shows that the reason why the non-current liabilities of VHC increase is because that they have made some big investment during these 3 years, considered aside from the impact of the COVID-19. And finally, the stockholder equity of VHC also rose every year, including 5.9% in 2020 and 20.3% in 2021 compared to 2019. It showed that VHC didn't affect much by the impact of the COVID-19. Instead, that they have made some development as the value of VHC continued to rise during the 3 years. Next, about the competitor IAM. Their non-current liabilities increased slightly between 2019 and 2020, while only increasing 0.1% from 2020 to 2021. And also the stockholder equity of IAM decreased by 8.2% in 2020 compared to 2019. And also at the same as non-current liability, the number just increased slightly in 2021, which is roughly around 0.1%. By considering the downside of their assets, stockholder equity, and the rise of liabilities, we could see that IAM performed badly during the 2 years compared to VHC. And the table also showed that they were affected dramatically during the lockdown of the COVID-19 and only recover a little bit after the lockdown. Next, we'll analyze the income statement of VHC and their competitor IAM. The first value of income statement is total revenue. Firstly, about VHC, the value decreased by 9.3% from 7.8 trillion in 2019 to 7.1 trillion in 2020. However, it increased significantly by 26.4% and exceeded the number of 9 trillion in 2021. On the other hand, the total revenue of IAM decreased by half in 2020 compared to 2019 and only raised a little bit, which is 9.3% in 2021. This value showed that more companies were affected negatively by the impact of the COVID-19. However, there's a big difference between them. While VHC only slightly affected a little bit by the lockdown process and create a big development that brings a lot of revenue after that, IAM was hardly destroyed by the lockdown and only make a slight recovery even after the lockdown process. Next, look at these 3 values, including cost of goods sold, total expense, and non-operating gains or losses. You could see that all of the number of VHC decreased between 2019 and 2020, while strongly increased in 2021. It showed that VHC successfully covered and developed through the impact of lockdown period. Also, the scale of operation was more stronger than before. On the other hand, the situation of IAM was not positive at VHC as the number decreased dramatically and just showed some small recovery in 2021. These numbers mean that their scale of operation was become smaller than 2019. And that's the end of my part. The next part will be explained by Kim Win.
Thank you, Wei, for presenting non-operating gain and loss. I'm Trang will now present the financial ratio EPS, which is calculated by dividing net profits accessible to common shareholders by the average number of shares outstanding during the specific period of time. The analysts use EPS as a measure of a company profitability. The bar chart shows that there is a well-known relationship between the VHC and the AAM. Despite both companies' statistics continuously falling from 2019 to 2021, the AAM's earnings per share was still much lower than the VHC's. And in particular, VHC's number were more than 10 times higher than AAM's. Profits per share for VHC decreased noticeably from 12,798 Vietnam dong to 3,985 Vietnam dong in 2019 to 2020. At 6,040 Vietnam dong the next year, it produced another upstream rise to 2,055. On the other hand, competitor AAM has a far lower EPS figure. It started in 2019 with 852 and unexpectedly dropped to minus 1,145 during 2020 before increasing to 22 Vietnam dong in 2021. In conclusion, there is a sizable gap between their metrics. Next, let's explore the liquidity ratio of the two firms that we're studying now as we go on to the section with financial parameters that businesses employ to evaluate a company's capacity to pay its short-term loan commitments. VHC and AAM are being analyzed. This indicator aids in determining whether a business can use liquid or current assets to pay its current liabilities. The current ratio, quick ratio, and cash ratio are the three liquidity ratios that are frequently employed. The amount of current obligations is put in the denominator of the equation for each liquidity ratio, and the amount of current assets is put in the numerator. Particularly in the terms of liquidity, both organizations are performing well, but in this specific case, the two firms varied in quite different ways. The current ratio of AAM finally reached 24.12 based on the 2021 report, whereas the current ratio of VHC had a steep fall. To most accurately reflect the company's financial situation, the current ratio should be utilized in conjunction with other important indicators. As a result, the quick ratio appears and completes the current ratio. The quick ratio between the AAM and VHC is 8.83 times greater, a substantial difference. After reducing inventory, the quick ratio of two enterprises has significantly decreased in the comparison to its current ratio. AAM is entirely capable of repaying debt that exists VHC according to the historical data. The cash ratio, a measure of a company's financial health, shows whether it will be able to pay its short-term debt commitments. The firms did not currently have sufficient cash on hand to meet their short-term obligations since there are no number greater than 1. The currency ratio of VHC is lower than that of AAM, hitting a notable peak in 2019 with a distance of 0.073. The AAM ratio is always higher, indicating that the company is more likely to settle all obligations. However, a low cash ratio may indicate that a company is taking full use of potential benefits of low-cost loans and investment in profitable businesses. VHC and AAM seem to be swapping trends with previous ratio. Now we will come up next with the efficiency ratios.
Thank you, Trang, for introducing me. I'm Kim Quyên and I will describe the inventory turnover. The inventory turnover for VHC in 2018 is already the largest in the time period. The market, however, decreased for the corporation from 5.62 in 2018 to 4.82 in 2020 before increasing in the last term. Inventory turnover is far higher than AAM with the exception of TAM in 2019. Most of them are below 2. Now I will present the ratio analysis, which includes 3 terms. Debt ratio shows its company ability to pay off its liability with its assets. Debt equity ratio is the measure of the relative contribution of the creditors and shareholders or owners in the capital employed in business. Time interest earned is the measure of a company's ability to meet its debt obligations based on its current income. From the data in this bar chart, VHC debt ratio steadily rose from 2018 to 2021, while the rate of AAM unevenly fluctuated during the 3 years. For the debt to equity ratio, although the rate of VHC gradually increased, in 2020 the competitor AAM rose suddenly to 0.39 times and reached a low rate in 2021. The graph illustrates a fluctuation of the times interest earned ratio between VHC and its rival AAM from 2018 to 2021. In general, the proportion of both VHC and AAM have an abnormal change. VHC ratios reached the higher value in 2021 compared to the abnormal fluctuations of its rival AAM during 3 years. Specifically, AAM reached a peak in 2018 and then had a slight increase in 2021. Move on to the profitability ratios. I will show 3 terms of profitability ratio. Return on equity, or ROE, is considered a measure of a corporation's profitability and how efficient it is generating profits. The higher the return on equity, the more efficient a company's management is at generating income and growth from its equity financing. Return on assets, that indicates how profitable a company is in relation to its total assets. A higher return on assets means a company is more efficient and productive at managing. The net profit margin measures how much net income or profit is generated as a percentage of revenue. VHC net profit margins were consistently higher and surpassed AAM for 3 years. In particular, in 2019, return on equity and return on assets reached high values. Meanwhile, AAM was affected by COVID-19 pandemic, and the figures for net profit margin, return on equity and return on assets declined significantly. The price to earnings ratio is a ratio used to determine the value of company by comparing its current share price to its earnings per share. Other names for the price to earnings ratio include the price multiple and the earnings multiple. The data demonstrate the changes in the price to earnings ratio of VHC and AAM from 2019 to 2021. Both companies' figures were not steady in the same period. The price-to-earnings ratio of VHC boosted slightly from 3.10 in 2019 to 10.39 in 2020 and gradually grew to 10.40 in 2021. In contrast, from 2019 to 2020, the figure of the AAM's price per rise to earning ratio declined significantly to a minus 9.82. Then it continued to rise rapidly up to over 584 in 2021. As the result, the rate of VHC was lower than AAM, which could mean that the business is more efficient than before. Therefore, earnings per share increased, resulting in a low price per rise to earning. In this case, it can be said that the stock is undervalued, or investors' predictions for VHC stock profits will no longer take into account the company's capacity for expansion. Finally, Jane will present the conclusions.
Thank you, Wing. Now let's move to the conclusion. At the very last, a high debt ratio indicates a higher level of risk because the business operations are heavily reliant on debt, many of which are short-term commitments. The PE ratio, which shows investors' expectations about the rise in the future profits from the firm, demonstrate that the AAM is still rising and so face many difficulties. Professional investors are often willing to pay premium for the top businesses. All of this suggests that the AAM is a good firm that is making minor improvements in the hopes that investors will see the future potential of this business. And that is the end of our financial report of the VHC and the AAM company. Thank you so much for your attention, and we are Group 6.